Should we buy or sell this PutWrite Strategy ETF? First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So under Fixed Income 360, I have a bunch of these very, very interesting option strategies ETFs. So what the PutWrite ETF does is that it is long the S&P 500, but it is selling puts. And this is, a very interesting way to get exposure to options without trading options yourself. It's a 2.67% here from the lows and minus 11% here from the highs. So minus 11% here from the highs versus the S&P 500, which is minus 19% away here from the highs. So let's just first get a better idea about what this ETF does. So it offers a pure play take on well-established option strategy. The fund writes at the money put options on the S&P 500 index, fully collateralized by cash and cash-like vehicles. The appeal is twofold: the premium earned from selling the options, which enable it to earn a return in a sideways market, and the generally lower volatility than the S&P 500. And the strategy forgoes big upside if the S&P takes off and has plenty of downside, downside if stocks tank. So here's the expense ratio, not too shabby. So let's look a bit here at, here is the yield, 1.20%. So let's here just look at the charts, weekly data points. So the thing is that if we look at this blue line, this is the blue 100-week moving average. It was a support here, here as well. Here it was pretty, solid resistance, as you can see. So it seems like it is a moving average that matters, even though this is a very different type of ETF. What we see now is that it looks very much like a support level, a level where people got more interested in this ETF. So let's look at the daily data points. Yeah, so when it comes here to the dailies, it is a bit messy. Ever since, autumn 2021, we got these nice rise, decline time cycles, very, very tradable. The time cycle suggests, that, a rising phase is basically expected. Let's look at these other indicators. Yeah, so in terms of RSI and the PPOs, we are emerging from a rather low level here on the weeklies. On the dailies, we do get a pretty similar message. And when we look here at accumulation distribution, it has been on a nice increase. So there is money flowing into this ETF. So I write 100 weekly moving average support, and I give the technicals a 4. Looking here to the right, over the last 5 years, the seasonality is pretty, bullish for this ETF, though it is, a lot of up and down, but overall it goes up. Over the last 5 years here, you see that June and July are very strong months for the PutWrite ETF. Looking, big picture, the last 7 years, June closes higher 86% of the time, and the month right around the corner, which also fits, with the time cycle, July closes higher 100% of the time. Obviously, that is pretty darn good. And August and September are also good. The seasonality data we have here is simply really, really good. So the bulls get a 7 here on the seasonality. When it comes to the fundamentals, it is tricky when it comes to these types of more fancy ETFs. So I think that in this case, it's best to not give a fundamental score. So I will just go to relative performance. One could, of course, argue that the fundamental analysis would be based on looking at the S&P 500. Then again, this one does sell puts, so it does have some factors that complicate it. But yeah, let's just look at the final item. And I think that is more like a general rule of thumb. If it's very messy to analyze a certain thing, whether it's seasonality, whether it's relative performance even, it's better not to do it than to force yourself to sort of make some assumption. Okay, so here we have the correlation with the S&P 500, and it is at 92%. We have 85% here with the Europe, and minus 29% with the China ETF, FXI, and 71% with the Africa ETF. Daily data points, 75% with S&P 500, 56% with Europe, 19% here with China, and 76% with Africa. I'm a bit surprised by the strong correlation here with Africa. It's not something I would guess. But the strongest correlation we do get is, unsurprisingly, with the S&P 500. So let's look at the SPY. So here are the weekly data points. The issue, as I mentioned in a previous video, is that during this counter trend rally here, one candlestick, then we fall back. We have had one strong candlestick, so I do think that there's a lot of bulls out there that, even though they bought this candlestick, they are looking at this. This was dangerous. So I think there's a lot of people with very sensitive triggers next week. So if we get any kind of weakness right out of the gate, then we could see a self-reinforcing effect. Similarly, if we get strength next week, right out of the gates, then the probability of multiple up weeks increases significantly. And for all intents and purposes, looking big picture, we are very low on the RSI and PPO here. And just look at the MACD. We recently set a record. We are very quote unquote due a more substantial counter trend rally. And we could have the worst bear market in history and still, rally upwards. So let's say that we rally here and then we meet solid rejection at, let's say, the green 50-week moving average. So let's say something like this happens. And we go, down again. But still, that would mean, a substantial rally. And just going up here would be, an 11-ish% increase. So from current levels. Here is the relationship between the PutWrite Strategy ETF and the S&P 500. And we do have a very substantial rounding bottom in development. Actually, it is a bit more mature. So basically selling your S&P 500 and going into PutWrite, it was the best strategy here in late November 2021. Ever since then, PutWrite has substantially outperformed sitting purely in the SPY. So let's look here at the seasonality. So let's do it like this. So we usually see PutWrite underperform into the 30th of June, but then it outperforms sitting in the SPY into very early July. Yeah, we did find some interesting things here on relative performance. So we do end up with a 5.3 in favor of the bulls. 100 weekly moving average support is sort of like, the stop loss, entry signal. I see that we have some time left. So let's just go through some interesting SPY stocks. So let's take Electronic Arts. Yeah, So let's just look at the chart. This is a very messy chart. I mean, there's a lot of things happening here, but sometimes, when I deal with a chart that is very noisy, I will just rather just stay away until, well, on the daily data points, you could argue that there is less noise when it comes to the dailies. So this red 200 day moving average, it is an interesting, short seller level. So there's that. But beyond, especially the weeklies, I mean, they were very messy. Okay, let's look a bit at NVIDIA. Yeah, I mean, we certainly have seen a substantial pullback, no doubt about that. And this is also one of those stocks that, went up very big only to lose a lot. Looking at, the dailies, something a bit rounding bottom-ish, but yeah, I mean, clearing the 20-day moving average here in purple would be like a very clear sign that the bulls have something a bit more ambitious going on. What about Exxon Mobil? As you can see here, this purple 20-week moving average, it has a long history of mattering here. So let me just quickly draw that in. So it's been a fantastic level here for the bears. I mean, really a good level. They just can come back to it and put on their trades. But the bulls also have an affinity to that moving average. So this is a very interesting thing to watch going forward, because 2 weeks ago we closed below it. This week you see that we are right at that moving average. So that one is a huge deal. The problem for the bears is that if you look at the wick of this last candlestick, it went all the way up here, and so even though, yes, we are still below it, it's a bit intimidating as well, because it goes to show you that there were bulls up there, so it's dangerous. If you compare that, to the past, here you can see the wick just neatly go up there and get rejected. Then it is a very easy short sell. Here, this is a bit precarious. And the interesting here, if you look at this candlestick, is that the following week, there were actually some bulls that looked at this candlestick and were like, oh, maybe we can go up there. But then, the bears came back. But yeah, you can see how there is a dynamic relationship between the candlesticks. Let's finally look at Meta. Okay, interesting. So I typed Facebook like this, but now they actually have the Meta ticker. I wonder whether anyone can get, the Facebook ticker. It will be very interesting to see who takes it. Oh, I can see that Meta platforms, they have FB actually in Ukraine, but that's a different exchange altogether. But yeah, okay. So let's keep our eye on the FB ticker. Okay, so Meta platforms definitively have a screaming double bottom here, like this and like this. Double bottoms have been very, very tradable before here, very nice trade. Let's go further back here. Also, a double bottom, let me draw it in. Okay, let me just do it manually like this. Double bottom, it did work out pretty well. So when it comes to Facebook, well, Meta platforms, the double bottoms are a huge deal. So this looks very interesting from a pure double bottom perspective. Obviously, you need to look at a bunch of other indicators as well. But yeah, Facebook looking very, very interesting. So yeah, we have looked at a bunch of stuff, interesting times in the market. Long term, I do actually think we are in the process of making some kind of temporary low at least. But as I have said before, even during a ferocious bear market, it is completely normal and to be expected to have counter trend rallies, just like it is completely normal to have corrections in a bull market.